Hello everyone, John AG here. Welcome back to my channel, Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, real market updates that everyone cannot tell you. So please subscribe to this channel. And love you, all of my subscribers, for your support. Please watch this video till the very end because YouTube will not push my videos to more people, and the algorithm is already working overtime to suppress the magnitude of what just happened. We need to get this truth out there, and your engagement is the only way we break through their digital walls. Take a deep breath. Look at the date on your calendar. Today is Monday, May 11th, 2026. Look at the screen. Look at the world around you. Because today, history did not just turn a page. It slammed the book shut on an entire era of financial illusion and ripped open a completely new paradigm. Today, the price of physical silver shattered the psychological, historical, and heavily guarded fortress of $100 an ounce. For decades, you and I have been called crazy. We have been called conspiracy theorists, doomsayers, gold bugs, and archaic silver stackers living in the past. We were mocked by financial advisors who told us that a 60-40 portfolio of overvalued tech stocks and decaying government bonds was the only way to build wealth. We were told by the smartest guys in the room, the Ivy League economists and the Wall Street quants, that the paper derivative markets were the ultimate and absolute truth. They arrogantly proclaimed that algorithms and banking syndicates sitting in air-conditioned glass towers dictated the value of the Earth's most vital elements. But today, that paper burned. Today, physical reality reasserted itself with a sheer violence that has left Wall Street bleeding and Main Street celebrating. Today, we are witnessing the undeniable beginning of the most massive wealth transfer in modern economic history, and the absolute crushing defeat of the short sellers who honestly believed they could manipulate financial gravity forever. But how did this actually happen? How did an asset that spent a decade languishing in the 20s suddenly rip through technical resistance like a freight train through a wooden barricade? To understand the sheer magnitude of $100 silver, you must look backward at the crime scene. You have to understand the elaborate, legalized fiction known as the fractional reserve bullion market. For the better part of the last half-century, the price of silver has not been determined by the miner pulling raw ore from the dirt in the mountains of Peru or the deep shafts of Mexico. It has not been determined by the solar panel manufacturer in Shenzhen or the microchip engineer in Taiwan. It has been determined by keystrokes. It was controlled by a deeply flawed, highly leveraged paper market. For every single physical ounce of silver sitting in a vaulted cage in London or New York, there were hundreds of paper claims traded back and forth. The big banks, the bullion banks, acted as the untouchable architects of this matrix. Listen closely because this is the exact mechanism of their past dominance and their current downfall. They relentlessly shorted the market, dumping thousands of naked paper contracts during low liquidity trading hours, usually in the dead of night, to violently smash the price down, trigger retail stop losses, and fleece the everyday investor. They did this in the 1980s when they changed the rules on the Hunt brothers. They did it during the run-up to $50 in 2011. They paid billions in fines to the Department of Justice for spoofing the markets, a mere slap on the wrist, a calculated cost of doing business, while they continued to suppress the world's most indispensable monetary and industrial metal. They did this because cheap silver was a silent, unacknowledged subsidy for the modern industrial military complex. Cheap silver meant cheap consumer electronics, cheap guided munitions, and most importantly, it maintained the fragile illusion of a strong, omnipotent US dollar. By keeping the poor man's gold locked in chains, central banks projected an aura of absolute fiat supremacy. They wanted you to believe that their unbacked, endlessly printed currency was superior to God's money. But there is a fundamental law of physics and economics that they arrogantly ignored. You cannot print physical matter. You can print 1 trillion digital dollars with the push of a button at the Federal Reserve. You can generate 1 billion paper silver contracts in a high-frequency trading algorithm operating in microseconds, but you cannot code a single silver atom into existence. You cannot print the specific valence electron configuration that makes silver the most electrically conductive, thermally conductive, and highly reflective metal on planet Earth. The bankers completely forgot that their artificial paper world was built on a foundation of unforgiving physical reality. And in 2026, physical reality finally called in the debt. Let's look at the true catalyst that broke the machine. Let's look at the industrial fire that consumed the world's supply while the bankers were too busy playing with their paper derivatives. We are living through an era defined by three unstoppable, interconnected technological tidal waves: the global green energy transition, the total electrification of transport, and the exponential, terrifying explosion of artificial intelligence. And all three of these revolutions share a single, non-negotiable, irreplaceable bottleneck: silver. If you look at the data from 2024 and 2025, the world entered its fifth and then sixth consecutive year of structural, terminal supply deficits. The Silver Institute and independent analysts kept releasing alarming reports showing that global industry was consuming upwards of 200 million ounces more than miners were pulling out of the ground and recyclers were recovering. Where did all that metal go? It went onto the roof of your house and into the sprawling solar farms across the desert. Advanced solar photovoltaic systems went from consuming a fraction of industrial silver to becoming a massive, insatiable black hole for the metal. The new heterojunction and TOPCon solar cell architectures required significantly more silver paste, not less, because higher energy efficiency requires superior conductivity. There was no substitute. It went into the roads and highways. Every single battery electric vehicle rolling off an assembly line requires between 25 to 50 grams of silver. It is hardwired into the complex battery management systems, the heavy-duty power electronics, the autonomous LiDAR safety sensors, and the global network of high-voltage charging stations. But here is the detail the mainstream media is desperately trying to hide from you today. The final nail in the coffin of the short sellers was artificial intelligence. By late 2025, the global geopolitical race for AI supremacy triggered a historic, unprecedented build-out of hyperscale data centers. Computing power demands skyrocketed entirely off the charts. These next-generation AI processors run incredibly hot, and they require immense, perfectly managed electrical loads to function without melting down. The silver content required per data center reached astronomical levels, measured in kilograms per megawatt. The tech giants, the trillion-dollar sovereign corporations, suddenly woke up to a terrifying truth. Their entire future, their entire valuation, and their entire AI empires were utterly dependent on a physical metal that was suffering a massive, deepening structural deficit. When a technology company with a $3 trillion market capitalization realizes they need physical silver to build the infrastructure of the future, they do not care about COMEX paper contracts. They do not care about derivative pricing. They demand physical delivery. They back their logistical trucks up to the vaults. And when they looked inside the registered vaults of the West in late 2025 and early 2026, they saw the concrete floor. The registered, highly pure, deliverable silver inventories had been systematically drained. While the industrial titans were draining the physical supply from the West, an equally powerful parallel storm was accelerating in the East. Here on Aurex, we have been tracking this geopolitical tectonic shift for years. We warned you this exact scenario was mathematically inevitable. The weaponization of the US dollar back in 2022 taught the developing world a harsh, unforgettable lesson. If your national reserves are held in fiat currency controlled by a foreign adversary, your wealth is not truly yours. It is merely a conditional privilege that can be switched off overnight. Enter the BRICS nations. By 2025, the de-dollarization trend had shifted from a quiet diplomatic whisper to a deafening economic roar. Alternative financial infrastructures were fully active. Bilateral trade between major Eastern powers, energy producers, and manufacturing hubs was being settled in local currencies and backed by hard, tangible commodities. But the real shockwave hit the markets when global central banks, already gorging on gold at record-breaking rates, began quietly and aggressively accumulating physical silver. Why did they pivot to silver? Because sovereign wealth managers looked at the math. They saw that the gold-to-silver ratio was absurdly, comically disconnected from geological reality. At ratios of 80 to 1 or even 60 to 1, silver was mathematically the most undervalued asset on the face of the planet. It comes out of the ground at roughly 7 to 1 compared to gold. The East recognized this immense arbitrage opportunity. India led the charge with absolute ferocity. Indian consumers, high net worth individuals, and state-backed institutions imported hundreds of millions of physical ounces, stripping the global supply chain bare. They completely bypassed the heavily manipulated Western derivative exchanges, drawing metal directly from refiners and draining London's physical reserves. They created a massive, unfillable vacuum of liquidity. The East understood what the arrogant West had completely forgotten. Wealth is not a blinking green number on a brokerage screen. Wealth is tangible. Wealth is immutable. Wealth is universally recognized without counterparty risk. As the United States printed trillions more to service a spiraling, uncontainable sovereign debt crisis, the rest of the world ruthlessly converted those decaying dollars into physical gold and silver. The Western bullion banks suddenly found themselves trapped in a vice between two crushing, immovable forces: the insatiable industrial demand of the tech sector and the relentless monetary accumulation by the Eastern Hemisphere. The pressure gauge was deep in the red. The lid was about to blow off the global financial system. And so we arrive at the chaotic, historic events of the past few weeks, culminating in today's unbelievable $100 print. For years, the commercial short sellers believed they were invincible gods of the market. They believed they could always manufacture enough digital paper to suppress any fundamental breakout. But when physical demand outstrips physical supply by hundreds of millions of ounces for 6 straight years, the physical market eventually, violently, breaks the paper market. It began slowly in early 2026. Silver pushed past $35, then steadily ground up to $40. The technical resistance levels, painstakingly built by the banks over decades, began to snap like dry, rotten twigs. The bullion banks deployed their usual, predictable tactics. They initiated aggressive, late-night spoofing. They dumped massive, unprecedented tranches of naked short contracts to trigger panic selling among the retail crowds. But something was profoundly different this time. Nobody panicked. The retail stackers held onto their metal with iron grips. The industrial buyers, absolutely desperate to secure their supply lines for their AI chips and EV batteries, bought the engineered dip aggressively. The Eastern central banks gladly and hungrily absorbed every single cheap paper ounce the West foolishly threw at them, immediately demanding physical delivery. Then, the true bloodbath began. The margin calls. As the price violently crossed $50, the historical, psychological double top from 1980 and 2011, the short sellers started hemorrhaging capital. You have to understand the lethal danger of a short position. A short position carries infinite, unbounded risk. If you borrow an asset at $30 and sell it, hoping to buy it back at $20, your profit is capped. But if the price goes to $80, then $90, then $100, your losses compound exponentially, destroying your balance sheet. Right now, as I speak these words to you, we are witnessing the complete and utter obliteration of the short cabal. The institutions that suppressed your wealth for decades, the banks that gaslit you and told you inflation was transitory, are currently facing margin calls in the billions of dollars. They are desperately scouring the globe, trying to source physical silver to cover their toxic paper promises, but the metal simply is not there. It is gone. It is permanently locked in the solar panels on rooftops. It is welded into the electric vehicles on the highways. It is sitting in maximum security sovereign vaults in Mumbai, Singapore, and Shanghai. It is buried in the backyards and locked in the home safes of everyday citizens who saw the writing on the wall and took action. The panic inside the COMEX and the LBMA today is palpable. You can smell the fear bleeding through the financial news networks. They are desperately trying to change the rules in real time. They are raising margin requirements to astronomical levels, trying to force speculators out of the market, executing the exact same playbook they used to crush the Hunt brothers 46 years ago. But 2026 is fundamentally not 1980. You cannot change the margin rules on a multi-billion-dollar AI data center that needs thermal management. You cannot force a sovereign BRICS nation to liquidate its strategic reserves to bail out a Wall Street hedge fund. The paper illusion has fractured beyond repair, and the massive short squeeze we are seeing today is the violent, unstoppable reversion to fair market value. When silver touched $100 today, it wasn't just a price milestone ticking on a screen, it was the deafening sound of financial chains breaking. We talk a lot about numbers, charts, and macroeconomic data on this channel. We talk about structural deficits, trading algorithms, mining ratios, and gigawatt capacities. But I want to pause for a moment and speak directly to the human element of what is happening right now. Because behind every ounce of silver, there is a profound human story. And this is the most important part of today's victory. Think about the grandfather who started buying silver American Eagles in the late 1990s. He was relentlessly mocked by his neighbors and colleagues who were getting rich on paper during the dot-com bubble. He kept his head down and bought more during the 2008 Great Financial Crisis, knowing in his gut that the multi-trillion-dollar bank bailouts were just a temporary band-aid on a terminal, festering wound. He held through the brutal, soul-crushing price crashes of the 2010s, passing those heavy, tarnished tubes of silver to his children, looking them in the eye and telling them, one day, when the system breaks, this will protect you. Think about the young, hardworking, blue-collar families over the last 5 excruciating years who watched their purchasing power evaporate into thin air at the grocery store and the gas pump. They couldn't afford to buy a home because private equity firms bought them all. They couldn't afford to participate in the rigged casino of Wall Street stocks. But every single paycheck, without fail, they took $50 or $100 and bought a physical ounce of silver. They rejected the system. They became their own central banks. They held their wealth in their own calloused hands, totally off the grid, totally outside the blast radius of a corrupt, decaying banking system. Today is their day of absolute vindication. What we are witnessing today is not just a market anomaly. It is a massive, historic, generational wealth transfer. Wealth is never truly destroyed in this world. It merely changes hands. Today, immense purchasing power is transferring from the heavily leveraged, arrogant, parasitic institutions of Wall Street right back into the hands of the patient, the prudent, and the prepared on Main Street. This is the ultimate poetic justice of the great silver squeeze. The very mechanism the financial elites use to suppress the masses, fractional reserve paper manipulation, has become the exact instrument of their own spectacular undoing. They trap themselves in a burning room of their own making. If you are sitting there holding physical silver today, I want you to literally feel the weight of it in your hand. You are not holding a shiny rock. You are holding freedom. You are holding a foundational piece of the financial architecture of the future. You held the line against the most sophisticated, well-funded psychological and financial warfare ever deployed against retail investors in human history. And you won. But I must issue a severe warning, and you need to listen to me very carefully. With this unprecedented victory comes immense responsibility and a period of unimaginable, terrifying volatility. So, silver is at $100. The psychological dam has burst. What happens tomorrow? What happens next week when the markets open? Do not for 1 second let your guard down. The dying beast always thrashes the hardest right before the end. The banking syndicates, the desperate hedge funds, and the terrified institutions will do absolutely everything in their power to slam this price back down and regain control of the narrative. We will see volatility that will make your stomach churn. We might see the price rip to $120 tomorrow morning, followed by a highly orchestrated, algorithmically driven flash crash back down to $75 the very next day. They will use this extreme volatility to try and shake the weak hands out of the market. They will deploy their mouthpieces in the mainstream financial media to tell you that the rally is officially over, that the bubble has popped, and that you need to run and sell your precious physical metal for their newly printed, rapidly depreciating fiat currency or their surveilled central bank digital currencies. Do not fall for their psychological traps. The underlying macroeconomic fundamentals have not changed one single bit. The structural deficit is still growing wider every single day. The tech companies still desperately need the metal to power the AI revolution. The BRICS nations are still accelerating their abandonment of the US dollar. $100 is not the ceiling of this market. $100 is merely the new, reinforced foundation. We are entering a chaotic phase of true price discovery that has not existed in the global silver market for over a century. As the gold-to-silver ratio continues to violently compress, moving from its manipulated 80-to-1 level, crashing down toward 40-to-1, or perhaps even returning to its historical geological monetary ratio of 15-to-1, the upside potential for silver remains absolutely explosive. But you must realize that this isn't just about getting rich in terms of fiat currency. What does $100 silver actually mean for the world? It means the fiat currency system is visibly failing. As the nominal price of silver goes up, the actual purchasing power of the dollar is collapsing. Your silver isn't necessarily gaining magical new value. It is merely revealing the horrific, hidden loss of value in the paper money you are forced to use every day. Your physical ounces are your life raft in a surging sea of hyperinflationary monetary policy. They are your leverage to buy physical land, to secure your family's future, to start businesses, and to build lasting generational wealth entirely outside the jurisdiction of a corrupt, failing banking system. You are living through a textbook historical pivot right at this very moment. Decades from now, Economic historians will write extensive volumes about the spring of 2026. They will write about the great silver squeeze that broke the COMEX. They will write about how the massive, unstoppable industrial demand of the future collided head-on with the fraudulent monetary manipulation of the past, creating an economic shockwave that completely rewrote the global financial system. But you do not have to wait to read about it in a history book. You are living it. You are the active participants. If you have been stacking and holding the line all these years, congratulations. Stay resolute. Do not trade real assets for fake paper. If you are just waking up to this reality today, it is not too late to understand the mechanics of hard money and protect your family. But the window of opportunity is slamming shut rapidly. Thank you for being here with me today on this momentous, historic occasion. This community, the Aurex family, is built on unwavering truth, on hard, undeniable facts, and on the courage to see through the establishment's illusions. Please, if you found value in this broadcast, smash that like button right now. Share this video everywhere, on Twitter, on Facebook, in your group chats, with your friends, your family, and anyone who will listen. The algorithm will try to bury this message, just like they tried to bury the true price of silver. We need your active help to break through the noise and wake people up. Subscribe to the channel, turn on the notification bell, and brace yourselves, because the coming weeks and months are going to be wild, volatile, and historic. I will be right here on the front lines with you, analyzing the real data, exposing the establishment's lies, and bringing you the unfiltered truth. I love you all, my subscribers, for your unwavering support. Stay strong, stay prepared, stay vigilant, and always remember, real wealth is held in the hand, not on a screen. This is John AG, signing off for Aurex. I will see you in the next one.